Okay, now let's proceed with IAS what? IAS 10 events after reporting period. Events after reporting period. Okay. Right now we are going to what? To there's some questions. Let's look at some questions and grasp the concepts a bit better, hopefully. Okay, let's look at this. Here we are told the following material events have occurred after the reporting what? Reporting period, but prior to the date of approval of the financial statement by the director. So definitely these are what? Events after reporting what? Period. Right.
Real.
So first of all,
Yes.
in an exam, you need to know if this an event after reporting period or not. Because if you're not careful, you may find yourself judging by using a lot of energy to judge while something isn't even an event after reporting period. So you need to know when is this an event after reporting period, and when it is, you then ask yourself, is it an adjusting what event? Some people use a lot of energy judging whether it's an adjusting or an adjusting event, while it isn't even an event after reporting what after reporting period. So sometimes I laugh. Okay,
Okay. Yes.
now you are told these ones. The insolvency of a major credit customer. I think we spoke about this, right? The customer
Yes.
became insolvent. It's like he became bankrupt. And so obviously,
Yes.
if there was no any reason, we presume that this was still there by the what? By the year end. Because you go back to, this is what you usually resort to. We speak of the major customer and if he's insolvent, it means he had to pay us something. That's why you are dealing with him. Because in the case he was paying us cash, it would be none of our business, right? Them being insolvent would be none of our of our business because
No
they,
problem.
they wouldn't be in our book, right?
Yes.
So okay, say if the customer is in my books, I usually record them at the receivables. What are the principles of receivables? We take the value of the receivable minus the what? If we have bad debts or if we have the provision for bad debts, for doubtful debts, I mean, you also take it there. So that's why you see, oh, it's an adjusting event. I should have made a proper provision, right?
Okay.
Okay, the other point we say the uninsured loss of inventory in a fire. After the year end, inventory was lost. Right.
Yes.
It's obviously, okay, of course, the value of inventory would have fallen, but it was an event after reporting what? Period. So obviously,
Yeah.
but it is obvious a non-adjusting event because there is nothing we can do. Right.
Yes.
So we say it's a non-adjusting what? Event. But
Even.
okay, maybe let me give you a hint, and maybe you'll one day answer me. In case this is an insured loss of inventory, in case it was the insured loss, insured what? Insured loss. Of
Loss.
course, this one. It is after the reporting what? The reporting date. So it is obviously an adjusting event. But in the next period now, let alone this period, in the next period, inventory would have to be written down, right, with that weight of what
Yes.
it is after that. But in case it was the insured loss, insured what? Loss. If it had insurance, it would still be an adjustment, but in the next period, there wouldn't be an impact, first of all, right? Because it is
Okay.
insured. So even though fire broke out and the inventory was destroyed to the extent of lowering its value so much, since we had insured it, there would be no problem, right?
Okay.
Yes. Okay, now the proposal of a final equity dividend. I think we have spoken about this several times. Proposal of a
Yes.
dividend is a non-adjusting. You see, the same questions are the same. A change of foreign exchange rates or tax, whatever. Also non what? Adjusting.
Adjusting.
Yes. Okay, let's look at this. Let's just look at this. We are required to do what? Advise whether the director is correct or not. Okay, let's read the scenario. We are told here shortly after the reporting date, a major credit customer of an entity went into what? Liquidation
Liquidation.
because of heavy trading losses. Okay, and it is expected that little or none of the $13,000 debt will be recoverable. Okay, so you have the trade receivables in your books at how much? 13,000, right?
13,000.
Which we
Yes.
expected to recoup in full from our customer. But now we are told it is expected that little or none will be recoverable. And 8,000 of the debt relates to the sales made prior to the year what? And 5,000 relates to the sales made in the what? In the first 2 days of the new what? Of the new financial year.
Financial. Yeah.
Okay, so 5,000 relates to it is actually an event after reporting period, right?
Yeah.
8,000, it is not an event after reporting, it is within the period actually. If
Yes.
you have
Yes,
to
sir.
adjust something within the period, you definitely have to adjust it because it actually relates to that period, no discussion, right?
Okay. Yes, sir.
Okay, then we are told in the 20x1 financial statements, the whole debt has been written off. All of the thing has been what? Has been written off. But one of the directors has pointed out that if the liquidation is an event after the reporting date, the debt should not in fact be written off, but disclosure should be what? Should be made by note to this year's financial statement and the date written off in the 20x2 financial statement. So this is what the director is this is what the director is suggesting. He's saying that okay, look. This is what we were speaking about. We only got information about that the customer was in liquidation after the year end. But first of all, you need to know, is this an adjusting or is this an event after reporting period? Okay, this is what we knew. The event was after reporting period, yes, right?
Yes.
Yes, but it gave an evidence of condition that existed because the customer doesn't just undergo this bankrupt, right, in a blip.
So, suddenly.
Yes.
Yes. Yes.
So, in case nothing, nothing special happened, which has been mentioned in the question, we would reasonably be forced to believe that, right? We would reasonably be forced to believe that, oh, this was the situation, right? Because it has not been proven otherwise, right? But now the question tells you 8,000 related to the year, so it should obviously be accounted for, obviously, all right? While
Yes.
5,000 related to the sales after the year. You have to be careful, 5,000 was the sales after the year. Just saying the sales after the year, and obviously you cannot recognize them, right?
Yes.
Let me tell you one thing. There is an important point here people miss. This is the starting point of the period. This is the end point of the period, right? Here we only speak
Yes.
of the event. We do not recognize the transactions. Please, let's get this right. We do not record the transactions. You only
Transaction.
record. We only try to look at what was already existing, but what changes would happen. The year has ended, you have made the sale. We do not say that, okay, since we have delayed authorizing the financial statements for you, so if you make any sales, you have to recognize them in the books. Obviously, sales after the year end are not going to be recognized. We are not going, even to the reporting period, you will not speak of transactions. Please, and please. Right. By
Okay.
events after
Yes,
reporting
sir.
period, we do not mean any transactions that occurred after the reporting period. Okay, the period has ended. I've sold goods to the customer, and then I say, okay, I've made the sales. Let me go and record the sales. No. If you make the sales and you get the point that, okay, I've made the sales at a loss. So you say, oh, this is inventory. So this indicates that my inventory at the year end should have been measured at a much lower amount rather than this. It's not like you're going to record that transaction of sales. Please and please, I think you've got that.
Okay.
Yes,
Yes, sir. Yes,
yes,
sir.
yes. So obviously, this 5,000 is just the transaction, right? After the year end, the
Yes.
transaction is not even part of an event of the reporting period. That is obviously something else, right?
Yes.
So we could be forced to say that, okay, so this 8,000, which was still there, it seems that it shouldn't have been 8,000, right? Okay, then that's why you could come to the solution and it would look like this. If I send an event of the reporting period, they're just defining this one is an event between the what and what. 8,000 of the recoverable existed at the reporting what? Date.
Date.
That's why I told you whatever happens, whatever transaction happened after the reporting date, that is obvious not recognized. We only look at for the evidence of conditions that existed, right? So
Yes, sir.
8,000 was existing by the reporting date, and so we should have foreseen that the customer should have actually required a proper provision for bad debts, and in that case, we wouldn't have recorded, we wouldn't have had 8,000 in our what? In our books, right? So it gives evidence of
Okay.
conditions that existed at the year what? At the year end. That's why you say in accordance with IAS 10, this is an adjusting what? Event
Event.
which would require the date existing at the reporting date to be written off in 20x1 financial what? Statement. The remaining
Statement.
5,000 did not exist at the reporting date and should thus be written off in 20x2 financial what? Statement. Right.
Statement.
First of all,
But we need to indicate it in our notes, this 5,000.
this 5,000, 5,000 isn't even, we only indicating in the notes events after reporting period which are non-adjusting events. 5,000 isn't even a non-adjust. You don't even speak of non-adjusting event here. It is just a normal transaction. That's why I told you,
Okay. Okay.
distinguish, make a distinction between events after reporting period and the transactions after reporting what period. They are two different things.
Period.
Yes,
Okay.
yes.
Okay.
Okay, now,
And this 8,000, sorry, sir, this
eh,
8,000 that was within, but we didn't just oversee it. What will happen now?
okay, we have
We are
said.
going to adjust it within,
Yes, we have said that this 8,000 had been recorded, but it shouldn't have been what? Recorded because it's
recorded.
8,000, but we actually being bankrupt now, it means the customer cannot pay us anything, right? And this indicates that
Yes.
by the year end, we would have foreseen that, okay, this customer isn't well, we should make a huge provision, right? Making a huge provision would, provision is of a credit nature, provision for bad debts. Let's say you could have a provision of 8,000, right? And maybe that
Yes, sir.
provision could have gone to profit or what? Profit or
Loss.
of also
Uh,
8, how much? 8,000. So we would expect it right off this 8,000 because we would no longer be we would no longer be actually we would still the customer would still
receive
be
it.
owing us, but they wouldn't be able to pay, right?
Yes, sir.
So we just have to remove that because we would just be
So
discussing.
we'll go back to our financial in
Yes,
2021 and do this, but this is
yes,
it. Yeah.
exactly,
Okay.
exactly. That's what we
Okay,
would
sir.
have done.
Thank you.
Okay.
Okay.
And now and this question I don't think you should try this one. Okay. Maybe we can just look some. It's not so bad. You can just look some. Okay, it says uh, it, what are you required to do down here? Okay, let's just go up. No problem. It says your answer should be in the following format. We are not in an exam here, right? We'll just do it our own way. So the question says, consider the following list of events that occurred 31st December 2016, which reporting date, and 31st March 2017 should be which occurred between, right? Which occurred
Yes.
between. Okay, let's for
Take
example
for
between these ones. Okay, 31st December 2016 and 31st March 2017. So these are the events at the reporting period, we presume, because 2017 was the date of authorization of financial statement.
statement.
And decide which one you would classify as an adjusting event and an adjusting what? Event. You should
Event.
also state clearly the treatment that you are proposing in each what? In each case. Okay, that's fine.
Case.
Yes. Okay, A, Roman 1, we're told the receipt of net proceeds of sales, 12 million for inventory items whose net realizable value. Okay, we see the receipt of net proceeds of sales. Okay, it's an unadjusting event, of course. It was after the year end. We have sold the inventory, it means it seems right, and you have received how much? 12.6, right?
Yes.
For inventory items whose net realizable value was estimated at 31st December at the end of the year at how much? 12 million. And the cost at how
12
much?
million.
12.5. You see now, hey, you ask yourself, okay, if by the end of the year the cost was 12 million, sorry, the cost was 12.5 and the net realizable value of 12, what we would have done? Usually, inventory is measured at the law of cost and net realizable what? Value. You get me?
Value.
Yes. It's like when you do the impairment there and you say that you measure the value of the assets at the law of carrying amount and the recoverable amount. You know, that's usually the case. We just don't say it. But you measure the value of the asset at the law of carrying amount and the recoverable what? Amount. If you can get the
Amount.
point, you can look. That's why when the recoverable amount is lower, we get the impairment and reduce your carrying amount, right? But
Mm.
when the recoverable amount is higher,
We use the we use the higher we use the higher amount.
no, we use the lower. On the higher is when you do compare the value in use and the recoverable amount. I'm speaking of impairment. When we speak of the impairment, we say that you should not hold something in
Yes.
the book at an amount more than you can do what you can recover. So if the asset in
Yes,
the book
yes.
has 80 million and you can only recover 60, you have to reduce it. So you have gone for the lower, right?
Yes,
But
yes, sir. Yes,
when
sir.
in the books the carrying amount is 80, but you can recover 100, you say, okay, we have not held more than what we can recover, so you leave it as it is. So it's like you take the lower,
Yes.
yes, of the
Yes, sir. Yes, sir. You are right. Yes.
okay. So that the same applies to what? To inventory. So on inventory, you'd have said,
Okay.
which is the law between the net realizable value is 12 million, cost is how much? 12.5. So it means in the books at the year end, we recorded the inventory at how much? 12.5 because
Of
it is higher than this 12 million, right?
yes.
It was at the year what? At the year end, but now not. You have been told that after the year end, you have sold inventory at 12 point that.
0.6.
So you ask yourself,
Mm.
oh, what is this now? Okay, in the books, I've recorded, I have my assets at 12.5, right? It's fine.
Yes.
But now I can sell at 12.6. Oh, what is this? Then you say, okay, this is none of your business, right? Inventory being
Yes.
12.6. Inventory being 12.6, actually, first of all, usually measure at the law of cost and net realizable value. But you can see 12.6 is very high, right? It is even
Yes.
higher than what you have
The
recorded here.
cost.
Yes, yes. You see, so if it's high, it is okay. There is nothing to do, nothing else. So you just let it be, right? So you say it is a non-adjusting
Okay.
what? Non-adjusting event, and everything goes on. Okay.
Okay.
Command two, proposed, you see, if you just see this proposed dividend made by the directors board meeting on 31st January 2017. You know, it was between December 2016 to 31st March 2017. So this is also an event after reporting
After
period.
the
Yes,
yes.
January. Okay, proposed dividend was this one. We said that the proposed dividend is a non-adjusting what? Non-adjusting event.
Even.
Yes, and so if you see that it's a material, you can just go to note the financial statement and explain its nature, right? Explain its financial impact,
Yes.
something like that. Yes. You get done, and so actually, these are just the examples. So you could find a lot, right? I don't know. I should
Yes.
give you this. I should give you this as an example so that you can deal with it. This one, you have to deal with this enactment in February 2017 of a new customer protection law that requires the company to enhance disclosure in the labels on its what? On its products, including
Product.
translating them to Swahili language, right? This,
Yes.
apart from from the increasing labeling costs, makes labels costing the company 14 million what? You
Yes, sir.
you see that? So you also have to
Yes.
go and look at on how to treat this what? This 14 million. So you could first see. enactment of the law, whatever law you have enacted after the year end, this is obviously a non-adjusting what? Event in itself, when
Event.
you see it, right?
Yes.
That require the company to enhance disclosure in labels on its products, including translating these ones. Okay, this apart from increasing the labeling cost. Okay, of course you put the label, so it will have to incur the cost, right? It makes the labels
Yes.
costing the company this one useless. So it means maybe there was other labels, but actually they became useless and what, right?
Yes.
Yes. So obviously this one was a non-adjusting what? Event. So,
Event.
so how you should treat it further, I give this an exercise. I give it an exercise to you when you do revise again. This
Okay.
one is this Roman 4. We say the declaration of bankrupts. Let's finish up with this, and then we can look for maybe another example. The declaration of bankrupts for debtors, as usual, our credit customer, right? An allowance of
Yes.
15 million was set against the doubtful debts at 31st December 2016. So at the end of the year, we knew that there was an allowance of what? 15 million.
15 million.
The total amount receivable before the allowance was 42. So it means after the allowance of 15, we only remained 27, right? In the book.
Yes. Yes.
42 minus how much? 15.
15.
Minus 15, you get 27. So this is what we had done in the books. But are we told? And as a result of bankrupt declaration, sorry, comma here, directors estimate that only 12 million can be what? Recovered. You see.
Recovered.
So in the books, you still have 27, but you are told that you can only recover only 12 million. So it means 15 million also should have been part of the what? Of the provision. It's kind of we underprovided for the allowance for bad doubtful debts. Right.
Yes.
Why?
Yes.
Why? Because we speak of the data, and as usual, if the data has undergone bankruptcy and there is no any further reason for that specified, maybe the data broke some laws after the year end, and they had to pay a lot of penalties, which rendered them bankrupt. You would have said, okay, this is an unadjusting event, but this issue doesn't state anywhere, right? So it's just kind of it was
Yes.
in a normal course of the business that was identified. So the customer was actually in that precarious situation even before, but we are just yet to learn about it, right?
Yes.
Okay, so this is the obvious and adjusting event, and they would have to change this value of 27 to 12. So what are you going to do? We would have to reduce it 27 by how much? By 15, right?
By 15.
So trade
Yes.
receivables should be reduced by 15, or you could say you could have to increase this allowance by 12 by 15, right?
Yes.
Yes, so it should be from 15 million to 31 million. And this
So in this case, we debit allowance with 30, example.
okay, first of all, we all we need to know, first of all, right, is that
Yes.
if the trade receivable would be what? Would be reduced. That is obvious, right? But now, in the books, they like to use it. Actually, in the books, they'll just put one balance. But we usually have trade receivable, and we usually have provision for what? For allowance for
For
bad
bad
debt.
debts.
Yes. So in reality, we reduce this one, but actually, when you say you have increased this one, it means you have actually reduced what? This one, right? So instead
Okay.
of saying we reduce trade receivables by 15, you speak the reverse and you say we increase the allowance for bad debts by how much? By 15. If you say
By
that,
15.
ultimately it would mean you reduce trade receivables by 15. So you say you increase the provision for bad debts by 15. So, since increasing the provision means reducing the trade receivable, and trade receivable is an asset, if you reduce an asset, you usually credit. So you could say, instead of saying credit the trade receivable, you say credit the what? The provision for bad debts. By how much?
Provision.
By 15, right? And then obviously the other side will definitely go to the income statement because it's a loss, you're going to lose, right? So it should go to the income
Yes.
statement of profit or loss of how much? 15.
15.
Yes.
Okay.
So by doing
Okay.
this, everything would be fine, right? Everything would be fine. So that's what. So it's fine. Some standard like this, they just to help you to go through any standard because any standard can be mentioned here.
Yes.
If you're just given the scenario and you just look for how you can go through it. Okay. I think this is also a fine question. If you get some time, you can also go through it. What does it say?
Okay.
It says, I stand events after reporting period sets out guidance for dealing with events which occur after the okay, we know about that. Okay, let's come here. Jody PLC is in the process of finalizing its financial statements for the year ended 31st March 2017. The
17.
draft statements were completed in 14 April 2017, right?
Yes.
So the year ends 31st March, but they are completed on 14 April 2017, and the audit is currently in progress. So the financial statements are expected to be approved by the board of directors on 15 May 2017 and published on 20 May 2017.
17.
Yes. So actually, when they are approved, it means they'll just be ready 15 what? 15 May, right? Then they're
Yes.
telling you the following matters have come to light during the audit and your advice is required. No adjustment has yet been made for any of the following. Okay, you can just look at one example. You can see that this question, you just need to get the nature of this question. Here you are told,
Yes.
closing inventory at 31st what? Closing inventory at 31st March 2017, right? This was the end of the year, includes 100 items carried at a cost of 5,000 what? Euros each.
Age.
Okay, this is fine. New safety regulations were announced on 50 April 2017, even to the reporting period, right? With the immediate what?
Yes.
Okay.
Effect.
The items of inventory do not comply with these regulations, and as a result, the net realizable value of the inventory is only how much? 4,500,
4,500.
right? So what are you going to do? Okay, would first of all would say okay, if you would say okay, this is an event after reporting period in an exam, it's fine, right?
Yes.
Yes, but new safety regulations were made. Okay, new safety regulation it means it gives you evidence of conditions that arose after the year end. Inventory itself doesn't have any issue, right?
Yes.
It is the new regulations which have caused the problem. So is it an adjusting or an unadjusting event?
And an adjustment event.
Non-adjusting event, good. That's why I say the items of inventory do not comply with those what? Regulation, then the result, the next realizable value of the inventory is only how much? 4,500.
4,500
Okay, so
each.
that one wouldn't be a big deal. Just let it be, right? So you just need to read this one and see, okay, so when you are told this one, this way it is this way. When this way it is this way. Now, for you to make more revisions, I'm doing this, right? I'm doing this,
Okay.
I'm putting it here intentionally so that when you come to this and you look at it, right, you can know, okay, this is
Yes.
the solution for the first question, this one for the second, this one for the third, and this one for the fourth. So you look at it, you solve it, and then you come and say, okay, let me go and check for myself. How did I fare of
Okay.
that, right? Yes. You come for the first one,
Yes.
you'd see it, right?
Yes.
Yes. So as usual, you should note that when an event is non-adjusting, you look. If it is material, you have to make a proper disclosure to the notes, right?
Yes, sir.
That is good.